Hello, every one of you. I remain your very own Mr. Cloud Alika, and today's cause is this is something that I wish I knew earlier because I lost so much money that I didn't even have, borrowed, took loans, and everything because why I just wanted to make money because I heard the financial market is highly profitable, and I just jumped into trades and end up making nothing. For real, it's been a very terrible experience for me, very crazy one for me, and that's why I'm releasing this video so you can understand what this is about. So without getting too emotional, so let's proceed to this topic is what is a leverage? What a leverage is, when to trade a leverage, when not to trade a leverage, what to look at for and what not to look at for. So if you've not subscribed, subscribe. If you have not shared my channel, make sure you do that. Make sure you follow, make sure you keep watching, watch and watch and watch till it becomes a part of you, because these are mistakes I made earlier and I regret making them, and I learned the hard way. I learned after I lost so much money trading the forex market. So please, I want each and every one of you to pay attention to this topic, because this is going to be one of the most important topic of your trading journey so far, because without this you might get carried away and end up losing money. So now the first topic is, what is a leverage? You've heard of leverage, leverages, use leverage, don't use leverage, 10x leverage, 10 is to 1 leverage, 100 is to 1 leverage, thereabout leverage. 500, I even see some brokers now offering 500 is to 1 leverage. So now what is a leverage? So what is a leverage? It's very simple to understand what a leverage is. A leverage is, for instance, now you see a very good trading opportunity, and you are a very good trade analyst or whatever, and you saw this opportunity, this bullish close here, or let's say you saw this hammer here, and you want to go into this trade. You got an intel that the price is going to move to this level, which is going to give you 1.54 gains. So which means with all this bullish move now, if you go into this trade now with $100, $100, you go into this trade now with this bullish move. So you saw this move, you go into this trade and you want to end somewhere here, maybe your take profit is here. And now, because now this is 1.45%, which means with all this bullish move you see here, what you're going to get is just $1.45, because the 1.5% of this is what you're going to get. So now you'll be like, no, if I'm going to use $100 and I'm going to go into this trade, I need to get at least this 100, this 1.4 now should give me 100%. Let me just get it so it's not going to leave the chart. So I didn't want to show you all this here, but because I'm still going to teach this in the class. So let's just go say, okay, you saw this trade now, and you have your, so now this is 1.42. So now you're using $100 now for this trade. With your $100 now into this trade, even if this successful bullish move occurred, what you're going to make is just 1% of this money, which is, with $100 you're going to be making just 1.40, $1.45. Sorry, don't mind my handwriting. $1.45. So this does not sit well with you, because how will you just go into trade with your $100 and you're making 1.45? If you go into trade with $1,000, you'll be making you're making $14. You go into this trade with $1,000,000, you'll be making 1% of $1,000,000 is $10,000 in this trade, because 10% is making about $10,000 in this trade. So now you say, no, 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 this doesn't sit well with you. You want to make more money. But what you have left on you now is $100. And you want to make more out of this profit. You want to see something out of here. What you will now do is, now you will now say, oh, I want my broker to borrow me money. I want him to give me money that I will use to trade. So when this trade happens, I will make more money. So now you tell your broker now you want times 10 times 100 of this your amount, which is you want 100 of this. So you will tell your broker that you want 100. Remember, all this is not something you go and start telling him physically, please. This is something you do online. It's all in your computer there. Before you start asking me questions, how will I meet my broker to tell him I want to borrow more money to trade this? So now you tell your broker you want to borrow 100 times, like you want to borrow 100 times your size. So what does this now mean? Just do the math. 100 times 100 will give you what? 100 times 10 is 1,000, 10,000. So if this goes as planned now, with this now, your broker is going to give you this 100x. So which means now your position size now is going to be 100 times 100, which will now be 10,000. The 1% of 10,000 will now give you 100. So which means now your broker will now do this for you. Let's just do this math. I will just be calling out, so you just understand. So your broker now will now give you this. So now your size before was 100. At this level you were using $100 to get $1, but now he will now make your size now 10,000. So in this 10,000 now, this trade will now move by 1.4%. So 1.4% of 10,000 will equal to, for you, $140. So now you see, this is the maths now. So at this level now, you needed 100 times this your size because you don't want to take chances. You are very sure of this move. You're very sure that this is going to be a very profitable trade. And you use the 100 times your size and you make this entry. So what will now happen now? Remember, what you have is just $100, but you met your broker. Your broker is offering you up to 100x leverage in a trade, which is 100 times your size. So which will now become 10,000. This is something that you don't get to learn everywhere. So just pay attention. So when you now get 10,000, so 10,000 now will now become your automatic entry. So the 1% of this now, of this 10,000 is now 140. So which means because you use leverage with your $100 now, you are making $140 with just this 1.42% win. Wow, this is mind-blowing. This is one of the great importance of leverage, because with just $100, I told my broker I want to trade with 100 times my size, and my broker is offering me that opportunity, that trading margin. My broker says, okay, no problem, your initial entry here was 100. No, I'm going to make it for you 10,000. Let's see. So this now goes in your favor. Just a 1% move now gave you what? $140. But initially a 1% move now would have given you just this, which is 1.4 cents. But now because you use leverage, a 1% move now is giving you what? $140, which means you've made an extra profit, which means you've made times 2 of the amount you went into the trade with. Because I went into the trade with $100 and now I am leaving the trade now with $240. Do you understand? So let me call it out now. So you went into the trade now with $100 because you use a leverage of 100x leverage, and now your broker, that means he now puts into $10,000 for you to go into this trade. So now you now made an extra $140, which means this now becomes your balance. This now becomes your balance. So what does this mean? It means that you went into this trade with $100 and you used the leverage of 100x leverage. And because you were very sure of this analysis, you were very sure of what you were doing, and this trade went in your favor. So what now happened to your market? You made an extra $140. Your initial balance now becomes $240. That is because you are using leverage. But this Mr. here did not use leverage. So what now? The trade went successfully. What he now got in his balance now became this. So you see, this Mr. now is making, both of you now are using the same size. You people have the same $100. He uses $100 to go into this trade, and he made, after the trade went as he planned, as he intended, as he watched it for, he made $101. But you now, you went into the same trade, and this trade went as you planned, as you imagined, and you made what? $240. So at the end of the day, who do you think made more profits? So let me call out now the profits. So this Mr. now made a profit of $140. So it's very simple. And now this other Mr. now made a profit of $1.42. But now, at the end of the day, now, who do you think made more money? Who do you think became a more profitable trader? It is this, because this Mr. made a $140 profit, and this Mr. made just $101.42. So even if you subtract this from this person is winning this person with over $138. Do you understand? So leverage now gives you this privilege, because you tend to trade with more than your size. So whenever you are trading with leverage, you end up making more money. What am I trying to say? You end up making more money whenever you are trading using leverage. You end up making more money than the person who is trading without using leverage. So now this is what it is about. So whenever you hear of leverage, it's simply telling you that this person is taking more than he has in his balance to trade. So let's imagine now you met your broker, and you told your broker that you have $100. He already knows what is in your balance, and you want to just 10x, which is 10 times your size. So what will your broker do in this situation? So your broker now will give you 10 times the 100 is what he will give. Your size will now become $1,000. So which means in this trade now, what you're going to be making in this trade now is going to be 1% of 1,000 is $10. So we will be making about $14 in this trade. So which means these persons now, I'm trying to make you understand what leverage is. This is one of the best course you would ever watch. So please make sure you follow, please make sure you share, make sure you like, subscribe, ensure you do that, because you are giving me ginger to keep dropping more and more profitable videos like this. So now this Mr. now went into this trade with $100. So now his balance now becomes $114. So this now becomes his balance. So what now becomes his profit? So his profit now becomes what? $14. So looking at this now, you will see Mr. A. Let's give them a name. Let's label them. Let's give them a name, because they need to have a name. You understand? They need to have a name. So let's give them a name. So let's give this Mr. Let's give this Mr. A. Let's give it Mr. A. Mr. A don't like leverage. He's not using leverage at all. So let's give this one Mr. B. Let's give this Mr. B, not Mr. V. I'm a Chelsea fan, so please make sure you become a Chelsea fan too. So let's give this Mr. C. I love football. So now this is it now. So now we just gave them a name. So now all of them have a balance of $100. That is what I want you all to know. Every one of them have a balance of $100. But Mr. A now did not use leverage. Mr. A just used his balance like that without any leverage. Mr. A made $1.4, which means his profit now became, his balance became 101. His profit now became 1.42. Mr. B used 100 times his size because he used leverage. His balance became $240 and his profit became 140. So now Mr. C now used $1,000, which is 10 times his size, which is his initial size is 100, because this is a 10x. So his total balance now becomes okay, let me just make this, because most of you now will get confused here. So this is now becomes his balance. Remember, all of them, they are all the overall capital that each and every one of them used. They had $100 on them. You understand? This is how you can understand best what the leverage is. So this Mr. B now used the $100. His balance now is 240 because he used the 10x leverage. Mr. A now balance now is 101 because he used no leverage. So his profit becomes 1.42. Mr. C now, his balance is 114 because he used 10x leverage. His profit now becomes 14. So now looking at this chart now, you will see that Mr. B is the richest. He made more money than all of them. So we can make Mr. B the king. So let's call Mr. B the profit king. So let's go. Mr. B now, we'll call Mr. B the P king. So Mr. B now becomes the profit king because he is the one that took the risks. He understood the pattern. He went into the market with $100 and came out with an extra $140, which now made him the king of the market. And we will now say now that Mr. A now is the small one. The small one. That's what we'll call him. We'll call him the small one because he did not make anything. Mr. A is a small one. So now what do we call Mr. C? We'll call Mr. C the smart one. No, let's call him the smart one. Yeah, smart one. So now looking at this chart now, who would you like to be like? Look in your screen. Look in your screen. Look. Who would you like to be like in this chart? You will want to be Mr. B because Mr. B is the king of the chat. He's the king of the market. Do you know what that means? That means if Mr. B had gone into this trade with $1 million with just this one move, which didn't even take up to how many days did it even take? It didn't even take up to a day. It didn't even take up to 2 days, and he made double his money, which means he made an extra $1 million. Do you know what it means? Do you know how he will be celebrated? So this is what a leverage is. I just gave you all a clear explanation of what a leverage is, because you need to understand Mr. A, Mr. B, and Mr. C. So this is a very interesting course, because this course we are going to end up seeing who is the real king of the market, because you all are after the money. This was a mistake I made earlier. I was Mr. B. Because one of the things in trading is this. This is what it is. When you don't have a strategy, you do not know what you're doing in trading, and you just go into a trade, you will get an invitation. What is an invitation? Your guesswork would give you profit. But after you've gotten wins using guesswork, that is when the market will now tell you, I am not your friend. You must put in the work. You must learn. You must master the art of trading. You must perfect it, or else you're not making a dime. You're not making a penny. So let's proceed and see what happens to these people now. What becomes the aftermath of these people? What becomes the after result of these people? So now we have the Mr. A, Mr. B, Mr. C. The king, the small one, the smart one. So this is how we are going to call it out now. So we are going to do it like this now. So this is what we are going to do. Now we are going to do Mr. A equal to, that means Mr. A, the trade went in favor of him. So Mr. A made $140. So I have to make it $140. So we now have the Mr. B. Mr. B made what? $1.42 from this trade. Then Mr. C made what? Oh, sorry, I didn't change this to equal to. So Mr. C now made a profit of 1 point. Okay, sorry, he made a profit of $14. So now we want to understand now who is the king of this market. Who is the wise one? Who is the king and who is the smart one? So this is just me trying to teach you all what a leverage is. So now a leverage is going to kill you, and the leverage is going to make you make really, really good profits. So you have to just follow the lead and watch. So now Mr. A made this money because the trade went in favor of him. So let's assume the trade didn't go in favor of him. So what will now be his loss? Because this is one of the things that most people fail to understand. Trading is not all about get rich and join the millionaires or you die trying. It's all about knowing exactly what you're doing, because leverage is very dangerous, very, very dangerous. It will kill you on the long run. So let's say this trade now did not go in favor of this person. Now let's calculate their losses. So now this person now, let's go with Mr. B. Remember, Mr. B is using 100 times his size. So which means now we have to calculate the loss now. 100 times 0.32 will give us 32. Sorry, 100 times 0.32, yeah, will give us 32. You can do the math yourself. Okay, so you've done the math, right? You've seen it. 100 times 32 now will give us what? 0.32. And remember, this is just a small move. This is just a small move. Like, let's say his stop loss was, because his stop loss will definitely not be here. And this person might not even use stop loss, so he might just end up losing. So 0.35 now. His loss now is going to be, now, in his $100, if this trade did not go in his favor, so if this trade did not go to his favor, so we have to do now $100 minus 32. So his balance is going to be what? So this is going to be his balance. His balance is going to be $100 minus 32 is going to give us 68. So now in his $100 now, what he will have is just $68. So let's do this now. 0.35%, so minus his $100. So how much will this one lose? So we have to do the maths now. So it's just very simple. There is no leverage. So now the 0.3% of 100 is the 0.35 cents. So this Mr. now would have lost 0, okay, we'll say 100 minus 0.32 equal to what? So what he would have left in his account will be 9.68 what he'll be left in his account. So this one now we have to also do the math. He also have $100 minus this. Now we have to do 10x times this will give us 32. So okay, sorry, I'm using 32 to calculate. So now we have to do it now. So hope you all are getting the maths. So this is how I calculate leverage. Minus this will give him 100 minus 3.2 equal to what? This user now will be left with, this Mr. C will be left with 96.8. So in this trade now that is in front of you now. So now if Mr. A had a loss in this trade, this is is a mistake. This 140 is Mr. B. and this is Mr. A. So if Mr. A now, if Mr. A had a loss, let's say this trade did not go as he planned, because trading is all about high probabilities. Probability means it might work, it might not work. So, which means you could lose money. So, at this level now, Mr. Uh, Mr. B now will be losing in this trade now. Mr. B will be losing $32, just this small move. Look at his profit. Yes, it's a very good profit he's looking at for. But what if? Because there should be a what if in every trade, and you must have a stop loss. So he just this small move from year to year, Mr. B, the king, will be losing $32 just like that in one trade. That means if he goes into this trade 3 times and he don't have wins, that means everything is blown off. So now you see Mr. A, the small one, will lose just 0.32 cents, not even up to $1. Mr. C, now the smart one, will lose at least just $3.2, which means 3% his size. This is the rule of trading. For every trade you go into, never you lose more than 2 to 3% of your size. What do I mean? Losing 2 to 3% of your size will be explained this way. This is what I mean. So now you are going into a trade now. This is a trade. Your entry price is, your entry amount, your entry amount now is $100. So not losing 2% of your size means that your exit, if this trade don't go in favor of you, should leave you at a loss of $98. Why should it be this way? Is because when you follow this principle that your stop loss should not exceed 2% your size, you understand this will help you have more wins, and it will give you more opportunities to have more trades. Like you would have many trades, because if you go into this trade and you lose 2%, the next trade 2%, you would see that you would not, even if you go into 10 trades, you would see that you would only be losing 10% of your account size, which is going to be just $10 of your $100. So now if you are trading now and you had $100 and now you had $10, you see you're still gingered, you're still motivated, you can still go into the trade. You understand? But when you go into a trade and you lose 32, you go into a trade and you lose $32 in a particular date, in a particular trade. So it means that you've lost 32. Oh, sorry, this is not the one to underline. It means that you've lost you've lost 32% of your size. And this is a foul trade. This person now is a loser, because you could have high probability, but still the trade can still go in the wrong direction. Because whatever you should understand is that whatever is going on in this market, whenever an event happens, you could be on this trade now, you've analyzed everything and you did not set your stop loss, and boom, the US government just say, okay, let's say you're trading BTC, and they just say, oh, they are going to ban BTC. You will see the market is going to have an instant crash, just like what happened in the in BTC recently, Ukraine and the Russian war. You understand? The market crashed instantly. So if you were on that trade and you were confident enough, you did not use your stop loss, no trade management, nothing at all, you just jump into the trade, you would be in loss. So why should you never lose? This is a different course of its own. I'm going to teach, there's a stop loss course, risk management, so I'm going to teach all of that. So now looking at this, now this Mr. A, which is the king, becomes the fool and the loser, because he lost 32% loss. So he automatically becomes a loser. So this Mr. now becomes a loser, a big time loser. Why? Is because if this trade had gone the wrong way, he will lose 32%. And one of the things you understand is that this Mr. now will say, oh, he did it well, and he will see another setup again, and still maybe he saw this setup and make that same mistake. You will see that at this level he's still going to lose much more than he intend to lose, because here now he'll be losing 50% and it's likely to be up again. And this trade now went the wrong way, because this could be his entry at this level. Now you see it went the wrong way and got to this point. hit his stop loss, you see he has lost 50%. So in just even two trades, two wrong trade or one wrong trade, Mr. B has blown off his account. This Mr. B will be dead, will be out of the market. Because why? When you use 100x leverage, this is something you should know. When you use 100x leverage, 100x leverage, 10% move in that market will liquidate you. Just 10% move. When you use a 10x leverage, when you use a 10x leverage, sorry, I said 10%, sorry, 1% of this in an 100x leverage, just the market just moved by 1%, just like the price of BTC just moved from here to this level, you're liquidated. Just 1% move. But when you use a 10x leverage, it takes the market to move 10% at once for you to get liquidated, for it to liquidate you. And when you use no leverage, you use no leverage at all. Let's just say the 1x, but nothing like that. You use no leverage at all. So what does it take to liquidate you? The market will have to experience 100% down. So you see now, so looking at this now, what do you see in this? You would realize that in this market now, Mr. B now, it takes just 1% move in the market for him to lose his $100. It takes 10% move in the market for Mr. C to lose his $100. It takes 1% move. It takes 100% move for this trader now, Mr. A, to lose his balance. And it is rare. In rare cases, will you see the market move by 100%. In rare case, like even if the market is dying, unless if you're trading a very stupid something, I don't even know what you're trading. But if you're not using a leverage to trade, the market, it will be rare before the market will move 100%. You will not even get liquidated. You will just be in loss, but you cannot get liquidated using no leverage. So this is what you should know about. So now Mr. Cloud has explained this to you. I've given you this illustration. I've given you this understanding now. You know, if you're using the 100x, you easily get liquidated. Using the 10x, it only takes 10% of the market's move for you to get liquidated. And remember, 10% move in the market is rare. It is very, very rare. I'm telling you, 10% move in the market is very rare. 100% move in the market, it's impossible. It happens, but it's like 1 in a million cases. You understand? Not like really million, means that it is rare. In rare cases does it happen. So now you are seeing this now. You've understood the leverage now. And this is the ultimate danger of using leverage. This is the ultimate danger, because now just the market moving, ultimate danger. I need to just make this ultimate danger. So this is the ultimate danger of using leverage. The ultimate danger is 1% move using 100x leverage, you're gone. And now I see some crazy brokers offering. I saw a broker offering 500% leverage. 500% leverage. Can you imagine this? That means the market, if the market just move in just about, let's say, 0 points, the market move will just move just about 0.4% move in the market, which is common. This happens every day. It means that your $100 instantly liquidated. Instantly. I do not know why these brokers are offering this. Why is because, let me tell you one of the secrets you should understand is, every trade platform, they want you to use leverage, because the more leverage you use, the quicker you blow off your money, and the quicker they take your money. Because one of the things you understand, that using a leverage comes with higher commission. When you're using 10 times your size, you pay a higher commission. When you're using 100 times, you pay a higher commission. When you're using 1x, like you're not using any leverage, you pay very little, like very, 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 very little. But the leverage you use determines the commission. That means you pay a higher commission borrowing this money. You're not just borrowing the money with your money, you're still borrowing the money and you're still paying charges. So this is why leverage is very dangerous. But traders will not, teachers will not teach you this. Most people will tell you, oh, we offer 100x leverage, 500 is to 1 leverage, and you don't know, you jump into the market using it, just 0.5 move, and you're liquidated and you start screaming, Forex is scam, crypto is scam, oh, the market is scam. No, it's not scam, you are scam, you don't want to learn. You are the scammer, you are the one who wants to reap where you do not sow. You want to just jump in and make money. You do not want to learn at all. Someone is giving you give someone $100 and he's giving you $50,000 to trade. What do you think he's after? He's after your $100. He's after your money. That your small $100 is what he's after, because he knows that small move in the market, you're gone. Small move in the market, you've lost your money. So this is something you should watch out for. Watch out for leverage. It is very important. You know this. So whenever you're going through into any chart, you're going into any futures trading or forex market or whatever, be mindful of the leverage. This is what they do not want you to know. This is it. They do not want you to know the secret. So they tell you they're offering leverages. So you just jump in and boom, you make money. So now I said I'm also going to teach you when to use a leverage and when not to use a leverage, because whatever has a good side has a bad side. Looking at this trade now, you see it went in favor of Mr. B, and Mr. B ended up making more money than others. Even if Mr. A had the right analysis, but because he did not use leverage, he ended up making nothing. So I will tell you all something. This is what you should understand. Institutional traders, who are they? They're people who trade with $1 million, $2 million, because in trading, if you're using anything below $100,000 to trade, you are using a small size. $100,000 is a small amount. Below that is a small size. You're using $10,000, $50,000. You're trading with a small size. An average trader should trade with at least $100,000 and above. So these institution traders, they are people who are trading with like $5 million dollars. So they're just looking at that. There's 1.4%, there's 1.3%, and they're okay for the day. Because if they use this now with their $1 million, 1% of this is $10,000, and they could go get these entries like 10 to 20 times in a day, and even make in a month they could be making like 20% their size, which is 20% of $1 million, which is $200,000. You understand? There are people who are trading with $10 million. You understand? Those are the institutional traders. Like, they're not just trading their funds, they're trading the funds of a whole lot of people, like firms, like companies, like banks, like the rest of that. You understand? So they do not use leverage. They do not use leverage. Why? Is because they have a large size. The reason why most people use leverage is because of their size. Maybe you're trading with $100 and you want to use leverage, so you can be making money, because you making $1 every day is nothing, because your $100 in a month you could be making like $30, and it's nothing for you. You understand? So what leverage is best? What leverage will Mr. Cloud advise you all to use? So I advise people to use leverage based on this. This is based on markets. So read what this is mean. This means use leverage based on market volatility. So the volatile the market is, that's where you can use leverage. So it depends on how volatile the market is. You understand? Volatility means the market moving very fast. You can get highs today, low today. Like currently now in the world now, the market with the highest volatility now is the crypto markets, because in a day we can see a 10% move in a day. The 10% move I'm talking of without using leverage. You can see a 5% move in a day. So which means if you're using $1 million, you can make 5%, $50,000 in a day. You understand? Using trading the crypto market without leverage. So the crypto market is highly volatile. So you can trade the crypto market. So you have to look at for a volatile market. So what leverage will I advise you to use? I advise beginners. Advise beginners that if you're trading with $1,000 and you know that this money is too big for you to lose, so do not use anything above the 3x leverage. Like if you're part of my trading channel, you see that most of the signals I'm giving, I tell you 3x leverage, because most of my students are very stubborn. Most of my members, they're stubborn. If I give a signal, instead of them to use the 3x leverage, they will go and use 10x leverage and 20x leverage, because before I give you this 3x leverage, I've already had my target, I've already have my stop loss, and I've already known that, okay, even if you're using $1,000 in this trade, you're not going to lose more than 3%, which is $30 in this trade. You understand? And if the trade goes in favor, you make close to 80 to 90 or $100, depending on how volatile the market is at that moment. So I would advise you, if you're using $1,000 and above, do not exceed the 3x leverage. So if you're using $100 to trade, let's say you're trading with $100, do not exceed the 5x leverage. So why will I allow you to use the 5x leverage using $100? Is so you can see profit in the market, so you can get something out of the market. You understand? You can get something out of the market. So the 5x leverage is good, so which means if the trade goes against you, you would know that your stop loss should be at 3% loss or 2% loss, depending on how tight it is. So this is a leverage I will advise you all to use. So depending on your size, so if you fall below, you're using, let's say you're using $50 to trade, so I will advise you to use the 10x leverage. Why? Is because if you want to get something out of your trade, because mainly you're not even supposed to trade with anything below what is it called, anything below, you're not supposed to trade with anything below $1,000, so you can make money. So you would not have to rush the market too much, because when you're trading with $1,000 and you're making at least 5% to 3% daily in a month, you see you're making $1,000 back or $500 back. You see that you can make a good living doing just trading, just analyzing and going into the trade. So this is one of the things that you should know, and it's very important that you know this, because your leverage is very important, your size too is very important. So now, when do you use leverage? So let's go into another chart, so I will illustrate when you can use leverage. So you need to watch my market structure so you can understand how and when you should use leverage. Let's say now, let's say we want to use leverage on this chart now. We want to use leverage on this chart. This is what you do. So now I say, when do you use leverage? It's very simple. Trading from an area of value. Why is this important? Is because I'm going to teach you all the head and shoulder pattern, and I'm going to teach you a lot of patterns, a whole lot I have in store for you guys. So just pay attention, and I try as much to simplify. So now this is a range market, because we can see a clear support and we can see a clear resistance. So we can see areas with most touches. So this is an so now looking at this now, we have now this area of value. We have this area of value. So I always do this so I will know my area of value. So now this is now an area of value. So when do you use leverage now? Looking at this chart now, you will see that this candle now is giving us an entry confirmation. This is a bearish dump giving us an entry confirmation. This is a bearish candle. This is a bearish close. So this is a bearish close. That's why I call it the bearish close. So this is a bearish close that destroyed our area of value. So this destroyed our area of value. See, it went below this a little blind, and it did not close inside. It closed out. It closed outside of the, those still in the area, those still in the area of value. So we have to now, let's say we want to short this market, because this has given us a bearish entry confirmation. We want to short this market. So what do? It's very simple. We can say our stop loss is going to be at this high. So let's bring out our short. We want to short the market. So let's say now we got this. So our stop loss will be at this close, where this bearish close, because it was at this level the market decided to close down. So our stop loss would be at this level, a little bit above, or we can be more conservative to use this. Oh, this we are selling short. uh we can use this. So our entry will be here because this is where the candle close. So our target will be somewhere here. Let's see if we can get at least the risk to reward ratio should be, this is 4 point, this is very high. Okay, let's use 2 to 3 risk to reward ratio. So now this, so this is going to be our stop loss, this is going to be this. So in this trade now, let's say we are using the 10x leverage. You will see that if this trade, this is so high, so you can use the 5x leverage because this is going to be very high for you. So you can see that if this trade goes against you, you'll be losing 5 to 6 5% of your account size. But if this trade goes in favor, you'll be making about 25% of your size. So which means the risk to reward ratio is what it's like, it's worth it very, very well. It's worth it. The risk to reward ratio is worth it. So you know that you are making a very good profit from this. So now let's see, this is a confirmation. So you see now, why will I use leverage now? Is because I've seen the possible place to set my stop loss, and I've seen that okay, I'm comfortable to lose 3. I can say, okay, let me use 3x leverage. So I'll say, okay, I'm going to lose 3% my sides, no problem at all. So I'm using $100. If this trade goes against me, like if this don't succeed, I'm going to lose $3. But if this succeed, I'm going to make about 3 times this, about $15. $3. You see, the risk to reward is good, which means I'm chasing $15 with a loss margin of just $3. So now I will now be waiting for this to play out. So I'm waiting for this to play out. So I'm going to make this very small so we can all see the candle play out. So so this is our stop loss. Remember, this is our take profits. So let's play and see what will happen in this chart. So can you see the market is coming down? So let's keep watching and see what is going to play out in this chart. So now looking at this now, remember this is the confirmation. So looking at this now, remember this is our confirmation. This is how the market eventually played out later. But you see, this was our confirmation entry at this level. Our stop loss was here. You see, the market even tried going back up, did not succeed. You see, we made more money. So which means in this trade, we made $15 and we did not lose anything. You understand? That's why it's good to plan your trade. You plan your entries. You understand? So when I saw this entry confirmation, this closed below this, and this was a bearish candle and it engulfed this other candle, and I said no, this is a downtrend. So I went into this trade, had my stop loss here, and I allowed the trade play out. You see, if I even had pushed that, yeah, but you know, you cannot tell everything. So I just pushed it at this level, and you see my risk to reward ratio was excellent and it was good. So I will also drop a video on risk to reward ratio. It's important you watch it, so because your risk to reward ratio will determine how profitable you will be on the long run. Most people fail to know this secret, and I'm going to drop it. So you can trade using leverage when you're trading from an area of value. Just like now at this area, now you saw this bearish close into this, and the highest high was this. So you can put your stop loss here and go into this trade to chase it maybe somewhere here or somewhere here. You would see that your risk to reward ratio becomes high, and even if you're using the 10x or the 5x leverage, you will see that you will be in good profit. So it's good you identify the trend of the market, you identify the areas of value, the area where you know the chart will always play back into or come back from. Then you can know exactly what you should do in the market. So this is how you trade using leverage. So always make sure you only trade from an area of value, so where you can see a clear place to set your stop loss and your entry, and you have your targets. Make sure you're chasing double your size, because the commonest mistake, like I see some teachers make, is they just give you an entry. Maybe they give you an entry here and they just give you like this, your risk to reward ratio is 1, which means if you win, you're just making 1%, you're risking 1% to win 1%. That's rubbish, doesn't make sense. So you should be risking, if you're going to risk this percent, you should be making at least at least something close, at least double the amount. At least you should be making more. You see here, you make 5.27. You understand? This is like multiplied by 2 of the price, which means if you're to lose $10 here, if it goes in your favor, you're going to make $20. You get, but me, I use a 3-to-1 risk to reward ratio secret I'm going to teach, and it's going to help you more understand what you're doing. So this is what you need to know about leverage, and I hope you learned a lot in this course, and we can just revisit it and meet Mr. A, the small one. This person needs to increase his capital if he wants to still make money. If not, he's still going to remain the small one. This person is a smart one. His capital is good, his leverage is good. He just needs to know how to time his entries and how to have the right stop loss. This person now is a loser because this person could get wins, but every slight opportunity he blows off his account. So whenever you're using $1,000 to trade, do not exceed the 3x leverage. So your losses don't cause you to panic or make you cry. Whenever you're using the $100, your leverage should not exceed the 5x leverage. Whenever you're using the $50, your leverage should not exceed the 10x leverage. You understand? So this is something you know, because whenever you use this leverage, always know that in a 100x leverage, 1% gets you liquidated. 10x leverage, 10% gets you liquidated. 1x leverage, 100% gets you liquidated, which is in rare cases, because you're going to have a stop loss in this situation, and this will not happen to you. So you'll be at the safer side. So always use anything below 10x leverage. And when you see that your stop loss is going to, when I'm going to drop a video on that, I'm going to make you all understand. So make sure you watch that video. Today is just explaining what a leverage is, secret behind it, and everything you need to know. So I hope you learned a lot. I hope this opened your mind a little, and opened how you see the market and how you understood what a leverage is, so you don't just jump into chat and end up losing your money. I remain your very own Mr. Cloud Oleka, and I say God bless you all. Thanks for watching.